should do well, which we have really discussed ahead, because I want to make the class so that we can leave very early. Whose sector will do well? At the early contraction, agriculture will do well. And we know that in Nigeria, this is how we classify our industry in the agriculture sector. We have crop production, fishing and hunting, trapping, all the livestock. Fine. In, let's say, for example, now, let's say banking sector, or let's say banking sector. Can we mention Women Bank? We don't want to, or Unity, we want to mention Women Bank because of the recent information that, yes, they are going to sell some, like they are doing private placement to, to put in the company and the bank and let it come back. Fine. If you look at their results, nothing to show for Women Bank. It's always that in any sector, there must be a laggard that are not doing well. That is the way it is. You can see, as I've said earlier, late construction. I mentioned construction there. Real estate, fine. Building, real estate, development, good. Go to consumer goods, which is there too. You go to financial sector, early construction, I still mentioned healthcare. Healthcare, it will always be there in all this economic cycle because it's a sector that people need healthcare. Even the old people and the new ones that are coming in. Mothers, they need to take care of their baby. They know that we'll go to how to choose quality companies. We have mentioned some fundamental tools here. Mike mentioned forward moving dividend yield and P ratio. P ratio to me is more of just, he said, because of the price, but to me P ratio is just to tell you how long you're going to wait in a particular stock, which I'm not ready to wait as a good investor. All I need that, where can I buy? If I have known all this fundamental, TA will come and finish the whole thing for me. All I need is just use this quality to choose a good company and remove my face from fundamental and now know what the right price in TA for me to enter this particular stock. And what we are doing now, using this one to choose what I call watch list. Your stock that will be in your watch list, waiting for the right price for you to buy them and the right price to sell them. And that watch list is very important because you are using fundamental to choose the stocks. After you are choosing the stock, the right price to enter the stock is what technical analysis will be doing for you. You know the right time to sell it off. Like Rashid was saying with the chart, there is where you take position, there is where you exit position. Then if the stock is down, it's going up, it's showing sign, you enter at the resistance level, you sell off, it comes down again, you enter again. But the guy that is thinking long, even all the gain that the guy is still holding to the stock, but you are making money, you are coming in, you're going out, you are coming in, you are making money. In choosing your quality company, the first that I know that is important there is your earnings growth. Look at a stock company that has consistent for the past 3 years, has 20 plus. That means their growth has been 20 and above. In terms of earnings growth, has been 20% and above, 30, 40, fine, good. If they are really focused, personally, I don't rely more on focus, but I rely more of what I'm seeing. But focus is good. When you open my eyes there too, I have to really take it. Company that has 20% plus focus in their earnings, you can target such companies too. After your earnings, something must bring about the earnings. When your turnover is low, your earnings will be low. That means your turnover is high, but not in all cases that your turnover is high that your earnings must be high. Most cases, when turnover is high, if the expense is high, it will also reduce your earnings. But it works sometimes that when you have, when I mean this revenue, I mean sales or turnover. Then when you have a growth rate of 15 plus, is good and more. When you have it, better for you to choose that. That means all I know that you are using this stock, these items to choose the right stock to buy at the right company. Also look at the important thing. What is the net profit margin? That means most company before their tax they might do some margin. That's why you have to wait to see the PAT. Then you now find the ratio to get your net profit margin. And this will go low. Like most of our bank in 2012, when I saw banks having 40, 35 profit margin, it shows that most of our banks are becoming more, cost efficient. Cost efficient. That means they are not wasteful. Before, you see a bank are making some billions. At the end of the day, you see 11%, you see 8, you see 7. But now, even if that is above 10, it's nice. It's on the green mode. You can still consider them. Then when I mean current ratio, that's your assets and your liability. Now, when you do the division, your assets divided by your liability. That means this is for short-term liability. A company has long-term life, but the short-term is one that will keep the company running. This one, if it is one or greater, it is also healthy.
May I ask a question?
Okay.
In financial analysis, do people compare the net profit margin with the inflation?
Yeah. Not often, but it's good to do that. But like for right now, the inflation is 9%. If the if our net profit margin is above inflation, it's good. It's good. It's good. This is the technical chart of our index. I know we've showed you live on it. Don't need more of this technical thing. Open our eyes. I want to show you this reversal chart patterns, which is said that there's a class for chart pattern separately. But if I will tell you that there are only 2 chart patterns we have: reversal and continuation pattern. These two, but all the other one, they can teach you everything. One is telling you when it's going to reverse. Is it continuation or is it moving? If you know this, if you understand these 2 patterns, for this slide now it's not for pattern, but I want to really show you so that you can have it and look like here. When the stock is moving down, you see it going here, it has reversed. It was trending down, but it has to go up. But when you see this double bottom, it also shows a good sign. It's a good sign when you see all these things on your chart, and you see that they are very good for you to know. Only that the time to explain them. It's what is not there, but we have a lot of things to do here. This is your continuation pattern. When you see this single breakout, when the stock goes up here, this is what we call resistance, and it comes down, and you break it, that stock is continuing. And you can see this one, the stock went up here, came down, it jumped. This gap, there's information that came in the morning as it opened. It jumped. If you want to buy this stock, you buy at this point, because here it closes here, it has jumped already. That means you have to buy from this point. All these are just in the chart. We are not doing chart now, but the day we are doing chart pattern, so we will now study this in detail. One of the jobs is that you will now know if you are looking at your chart that I'm not there, you know the kind of signs that you know that either is a continuation by a pattern or a reversal pattern, so that you now know whether to hold that particular stock or to change direction. Yes, yeah, what I'm trying to do. Can you see this one now? Increase here. In average, this is summary of indicators, how they work. Like I would say stochastic will have 20, will have 12, will have 9. Then also we have Bollinger. Bollinger has a moving average of 20 and standard deviation of 2. That means if you have all this in, I have to bring it down again. It's covering the I have to bring it down a little.
Up. You want it up?
No, minus so that you can see the up. What? No, not up. Reduce the plus so that you can see the top there.
You have to go to the plus. By starting go to the minus. Slide into the minus.
They cross each other. You know, in stochastics is also an indicator that moves. It measures the velocity of the stock, the movement of the stock. For this one, the movement, the velocity of the stock, the movement. If you have this, only that the thing is not clear. Even on my paper here, I don't know why it's not clear. What we'll do that we'll send this into your mail so that you get that stock. When the stock has done a high and it's not sent at either 20% discount from the high, look at that stock if there is volume in that stock. That's why we have taken this stock for you to know the high for the year and the low for the year. Look at a stock like Okomuna. It has touched 107 for the year. And look at the lowest it has gone so far. And look at what it's selling. The one it closed as at. Yeah. Then now consider this Okomu. Even though we are not looking at your charts, then for you to know where you are buying stock before you now go to the chart, if this stock is almost 50% below the top now, you can still look at that stock. Then that will now inform you to go back and look at Okomu chart. You are not doing other fundamental, but using price alone, price movement alone, will now give you an insight of what to do. Now Okumu have hit 170. Now it's saying this alone will form you go and study Okumu price. You now know that it was marked down. Why was it marked down? What is the? You now look at what is the share in issue, because something has said that if this stock like what we're looking at, Eternal Oil, we said that I'll hit 54 before it drops to 3 naira. That will now form you know to know what happened. If there's the potential that this stock will rally, that's why we said here we are using the high and low price of the stock to determine whether it's a stock to go in. And at the same time, you can also look at the dividend yield, which Mike mentioned. Look at Okumu dividend yield as we speak. Look at other good dividend yield that is above 4%. You go down and look at this stock like this stock having 6%, this one having 5%. They are this one that I know the matchup, but I have to send this one to your mail if you after the lecture. While you're doing this, the dividend yield. Now I'm not considering the P ratio. I'm looking at the high and the low and the dividend yield. That will now give you an insight whether you should go and study this stock and know how the stock is doing before you now look at your technical analysis.
Sorry, how do you? Dividend, is it you apply a formula to get right?
Yeah. Apply formula to get your dividend yield. Is by price. Yeah, you get your dividend yield.
And then you multiply by
100. You get your dividend yield. Well, now you know that this one
give you a percentage.
stage.
But if it's more than one, fantastic. Well, I have one question.
Okay.
Did you notice how many of the stocks right now are less than 4%? Have less than 4% dividend yield, which is the average of the market?
Yeah, the average of the market is 4, but the ones that are even above 4% are also.
Did you notice
Yeah.
how many stocks?
Yes.
You're not bring. What are
The
how many
stock were
less than 4%?
yes.
Almost all.
Almost all, not few. That is why I say our market, if you are looking at dividend yield, you've been discouraged. Okay, let's for example now, when Hallmark Insurance don't release the result on Wednesday, yes, on Friday now they are going to pay 3 kobo. Hallmark. No, for dividend and long-term investors, they will be smiling. That is 6%. They will be smiling because they know that for my 50 kobo, and if they were to adjust that stock, it will still remain 50 kobo because they can't adjust it to 45 kobo or 20. That means you are just taking your 6% free. You see, that's why although dividend you just to give you an insight, you can still go and study them more. Why do that? Just if you don't want to go for yourself to go look at all those earnings trend, look at price movement and look at their yields. We'll give you an insight before you go to technical analysis. Technical analysis only telling you is it the right time to buy the stock after getting all this information.
The point I'm trying to make is with so many stocks under 4% now,
Yes.
our long-term average for our market.
Yes.
If so many stocks are below 4%, that's giving us an instinct that the market is overpriced.
Price.
That's where my mind is.
It's going. That is overpriced. Like we showed when we were doing your general market analysis. I said that either you look at the overbought and oversold. When the market is overbought, what is it? It's overpriced.
Yes, their fair values are lower than their current prices.
Just like you just said now, if you're looking at the interest value of a company, most time it works for long-term investors. Let's for stock like Cadbury now. We are still saying that it's an opportunity. The fair value of Cadbury is below 20 naira. If you look at, you want to use the fair value, it's below 20 naira, but it's selling for almost 54 naira now. But the technical analysis there is still opportunity in that stock.
What I understood from what she said is, you see, the fair price is, we don't just look at the fair price on this moment. We look at
that will tell you whether that stock is overpriced or not. Okay, let's look at why I brought this financial sector that because the financial sector has not moved the way it's supposed to move after they have rallied during their end of the year. Since then, it's like they are not in the market again. You can see that the yield for them has really gone even above 4%, nearly for the banks that are paid dividend. Just because the price is relatively low compared to that tells you that their earnings, their dividend now, the price now, you can see that there are some relationship between them because their price is not good. But if the price has gone up, you know that the yield will be small. Financial sector, you know, like it's okay. I will condemn it. It's okay. You know why it's okay? Because this sector, they have volume in the market, which they control in the market, and also because of the nature of their transaction, they always make money. It's all about management or the period. Because I'm telling you, as we are speaking now, even Saturday, people are doing transaction at the airport. Whether the border banks are closed for but all the airports in Nigeria, banks there are working. You know, that means every day as Monday open now, every corner of Nigeria must be transaction. The banks have something to do. People are collecting money from ATM. You know, that is why this sector, anytime, you know, people want to do it because it's a sector that there is activities on it. That's why I say, let me just come out. There is the only way because I know now market is going. It's like market is cheating this sector. It's not moving the way the market is moving. But like the industrial sector index now, because everything is going up there because that is the focus of many investors. I think what we'll do before we round up, let me bring the other sector, the other slide up. That one is about institutional holding in a company. Because after we have used the qualities, using earnings, using profit margin, but you want to know what percentage of this company is being owned by institutional investor. Because I tell people that a company that you have institutional investor having less than 40% or 30%, target that sector. Because if the company is now find out that company has potential, they need to come and increase their holdings in the company. And when they come and you are in that company, you're going to make money. You're not thinking of technical analysis, you're not thinking of fundamental. This is just shareholding structure of the company is not making money for you. Like people that are in Poland, they didn't know that it's something about people that are still holding naira, but smiling because they have moved to almost 7 naira from 4 naira just because USC just step in to have 50%, 51%. That 51% not going to be in the market. We don't hold on it. That means we only have about 49% float, which other people also has some holdings of that company. That what we know is about, we're talking about USN. Let's go to that. Let me open that slide for you so that we can look at it together.
Can I ask you a question before?
Yeah, go on. Sure. Looking at the companies and the share they have in issue and which one is being owned by institutional investors. Institutional investor can be foreign investor, can be local investor, but they are holding there. They are there strategically to hold on, not to just to buy and sell the next day. You know, I mentioned Okomu. This intercellular South Africa has 52.3% of Okomu. Then another company has, that means the one that will have in Okomu that is flowing in the public is just 40.7. Free flow in Okomu. This one does, worry that most of them, because of in Nigeria today, they don't give you data correctly. As we were talking about 2012, we're in the FAT book 2012. That means 2013 they might be changed, but they've not updated it. Up to now, we have not seen 2013 FAT book. Or what are you just the world will know and the world will see, but we have to analyze it. If Okomu have just 40.74 float, what expect in that stock? That means for Okomu rally, if there is boom today, Okomu is going on, Okomu will sustain that up rally because the one in the market is small. But stock like First Bank, First Bank is owned by Nigerians, no foreign investor in that bank. That means every child, every graduate, every house has First Bank. If it goes up today because of little gain, it will say if you push First Bank, that is why shareholding structure most has positive impact and negative impact. If your stock is concentrating on few hands, you can manage your price. I said that is why Capital was able to manage the price what it is today. Capital has only 25% float in the market. Stock like Presco does have 1 billion ordinary share, and a company is having 60%. Another one is having 8%. Just only 31% is what we have in the market. The float is low. That means for you to, why I do all this, and just to explain to you, you have it. I've sent it to you for you to know where to enter. Yes, to your mail. Okay, I'll send it to you. Yeah, we'll have this and we'll guide you that, if you are keen in this stock, this is why I'm keen in this stock. For example, livestock, I think is down among them. Livestock before now.
Wait, can I just say something?
Okay.
The thing about free float that is very interesting about free float is
this thing trading has 16 plus 51. They have less than 29 in the market. That is why can see Nigeria Brewery now, since I moved from 2028, who were the peak, who were the lowest in 2009, it has moved up straight to 163. To go down is a problem because even though you want to say, so probably I want Nigeria Brewery, I will hold it because I know that I will make profit. That's why the dividend they are paying, because the price is still low, but people are still holding to Nigeria Brewery. It's not because of the free float. That means as a good investor, you have to have an idea of this. Look at Ashaka Cement.
just read it down. Let's see.
Look at CCNN. They have the government. Most of the state government are there. State government, they are not selling. State government are not there. Let's just look at, it's when the state is going to pay, that state that have gone to borrow money from the board market. the year they are born is coming and they might also okay, let's can exit this position, but they can't exit because they know that state is a continuous, it's not owned by the governor. He will leave office, but another governor will come and it will still remain. All that the government will have to obtain a social company, has to obtain, they're not going to sell it. I mean, if stop saying will assist the price of the stocks, if you know them. Look at WAPIC, WAPCO. Look at the price, the holding there. Look at PZ. Look at Unilever. Look at even this Julius Berger. Fine. Look at the holdings there. Look at 7-Up. Why 7-Up? The price won't be there. 7-Up. A company in South Africa has just 72 points. The price will not go down easily now. Look at Cadbury. Institutional investor there has 75%. That means Nigeria just have, both Nigeria, that 25%, pension fund will be among that will have it in Nigeria. The big boys there will have it. That means the float of Cadbury, that is why the price will remain there. It will go down. It's not that the earnings is too much. A store that is selling for having first quarter earning of 36 kobo is poor. But because the price has gone up, because of the it won't fall like that. But when they pay dividend after 6 years, everybody will happy that they pay 50 kobo dividend. After 6 years of problem, that also give Cadbury a boost that today people can say we can recommend Cadbury because that means if they paid 50 kobo last year, the fact that they pay 70 kobo this year, it's high. Look at Nestle. Nestle Nigeria. Look at Nestle Ghana. Has how many percentage of Nigeria? Nestle 59. Nestle Ghana. They bought here. I mean, that is why they have to go and build new factory in Ghana. Nigeria has to go and build new factory in Ghana because they are main baba in the company. And Nestle Switzerland has just 3%. That means it's Ghana that has major state. That means if anytime we are doing our AGM, Ghana knows how many checks will come from Nigeria to Ghana, Nestle Ghana. Nigeria have unless Nigeria has invested in another country, fine, but Ghana is relaxed. What would they gain from us is enough for them. Now that is why I said, like UAC, I mean personally, I will target UAC as the parent company that I'm buying other goods. That means UAC don't need to suffer, they need to struggle. At the end of the year, money will come from livestock, it will come from Portland paint, it will come from CAP, it will come from CAP, it will come from, no, money will be coming. That means the bottom line of UACN will be high. And also they are doing that business, they have Mr. B that running. But that means this one adding to that means if you are in that stock, you need to hold on to it.